Hi, this is Zach here with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 25th of February. Starting off with the FTSE 100, which managed to stay away from the rising 50-day moving average in the last half of the week, which is normally a good sign. Finding support above a rising 50-day line can be a leading indicator, and we're looking for this market to head up to 78.30 in the top of that rising August trend channel over the next couple of weeks, or hopefully a bit sooner than that. A bit below the 50-day line, 76.25, there's the risk of another test of the 200-day line at 75.40, but the way that we're behaving at the moment suggests that we might get away from, or get away with that, given that the RSI is now at 58 and has bounced above neutral 50. Onto the DAX, and we wish that the FTSE behaved like the DAX. Here you can see why. Unfold gap to the upside last week and held the top of that gap, which was very impressive. And then the same thing on Thursday for Friday, gapping up on Thursday and then closing near the highs on Friday. Initial target here up to 17,700 over the next couple of weeks. Best case scenario at the moment up to as high as 18,400 and the top of that very steep rising October trend channel by the end of next month. On the downside, not really expecting anything worse than the floor of the channel, 17,000, maybe a dip to 16,800 and the 50-day line, which is still rising as a worst case scenario. Moving on to the Dow, and here looking, so reflecting what we've seen at the DAX, a sharp rising trend channel, unfold gap to the upside on Thursday, and actually closing near the highs of the week on Friday. That suggests there's a decent momentum here. Unbelievably now, while we're above the old resistance there from earlier in the month around the 39,000 level, the longer we stay above that, let's call it 38,900, the greater the chance of move up to as high as 41,000 by the end of next month. On the downside, there is the gap to fill around 38,600. That also ties in with the floor of the October trend channel, and obviously there could be a little bit of a probe down towards the 50-day line, 37,900. But the way things are going, it actually looks as though we've got a market which is limbering up rather than consolidating. Moving on to Bitcoin, which had a rather a dull week compared to recent weeks, but at least we've managed to find support above 50,000 and above the old January 49,000 peak. The longer we have that gap between old resistance and new support, the stronger this market looks. And this looks like a mid-move consolidation ahead of an end-of-day close through 53,000 and that August resistance line to take us up to 60,000 by the end of next month. Worst case at the moment, probably down to 46,000, which was recent support for this market on the way up. Couldn't resist looking at Ethereum on the basis that it can be a leading indicator on what Bitcoin does, and in fact it is relatively higher in that bull flag than Bitcoin is. 3,100 is the August resistance line here, and above that we're looking for 33,300 over the next couple of weeks. Downside hopefully limited to 2,900 or 2,850, I suppose, at a stretch. On to gold, which is also looking quite sprightly at the moment. We've had a good end to the week with the 50-day line now rising and an end-of-day close above that, which is much appreciated. Just need to see this market break that December resistance line, 20.55, the level there. Above that, we would expect a quick move towards 2,100, maybe in a matter of a few days. And then for next month, up to as high as 2180 at the top of that rising trend channel from March last year. On the downside, ideally we stay on the right side of 2,000, as is quite logical given the three dips that we've had towards that area since December. Onto the stocks, and starting off with Ascent Resources, and here you can see that we've got bear trap gap reversal, which is one of our favorite setups. Here the bear trap gap reversal from below September support at 2.45, above that. Looking for an initial move towards the 200-day line area at 3.3 pence, ideally up to as high as 4.2 pence by the end of next month. Although it's sort of interesting to try and work out what might actually get the shares to rise that far and that quickly. Maybe people can try and guess. Like to cover the odd stock on Aquis, and in this case it's AQRU. Here the shares, or the setup, too good to resist, talking about. In fact, we've broken the 200-day moving average at the end of the week, 0.13. We haven't been above the 200-day line since April 2021, so that's a long time. So this could be significant, and the view now is that while we're above 0.11 at the floor of that channel, also the 50-day moving average, we could head up to 0.3 pence as soon as the end of next month. It's a punchy call, but that's what can happen with small caps. The other point to note is that on Thursday we had a gap close buy signal, so gapping down and then gapping up, and look at those very strong candles opening at the low, closing at the high, and we've also got a rising 50-day line, so this looks like a bona fide turnaround situation. Another stock which doesn't get much airtime is Arcontech, and here you can see that we've got sort of setup that's too good to resist. We had an unfilled gap to the upside, bear trap. I found an island bear trap reversal back in October. We've had a bear trap gap reversal and another gap, so two gaps off the low this time. That suggests it will not only get up to £1.12, which is the top of the rising trend channel from July 2022, but as high as £1.50, maybe as soon as the end of next month. I think ideally we'd stay on the right side of a pound if we were to do that. On to Bushveld, where although the shares haven't really moved, they seem to be making nice noises. And here the reason for saying that is that we had the unfilled gap to the upside in the middle of the month, and we've held above that on 4 intraday probes for support at 1.35. That suggests that we'll easily break the 50-day line at 1.75 pence over the next week, and maybe head up as high as 2.8 pence by the end of next month. Ideally, obviously, we stay on the right side of 1.5 pence. Next up is Coro, and here a bear trap gap reversal, or at least a bear trap reversal, gap higher as well. Closing near the 50-day line at 0.2, want to see that broken, and then that would give us an initial target at 0.25, followed by a best case scenario target 0.35 by the end of next month. But the main thing here is staying above 0.18 and recent neckline resistance. The company which I've really just cottoned onto in the recent past is Clean Power, and you can see why, because obviously it's been in a rather horrific bear run for much of the past year. An end of week close above the 50-day line for the first time since August, and the sooner we break 11.75 pence, which is our initial target there, top of that triangle from last month, the greater the chance of a move up to 18 pence by the end of next month. So let's see if CPH2 delivers the goods. Ensilica is next, and here you can see that shares hit our initial target there around 46 pence. They've now had a little dance either side of that, but the longer we stay above 46, the greater the chance of a move by next month up to 64 pence, on the basis that we found support twice above a rising, well, at least once above a rising 50-day line, and that tends to be a mid-move consolidation. So looking for the shares to head into the mid-60s relatively soon. On to Imperium, which had a great close to the week on great news as well. Here we gapped through a resistance line for 2 gaps in the recent past, in fact 3 this month. Looking for the shares to remain above the 50-day moving average at 0.55. We're really lucky they'll stay above the resistance line there from September at 0.58. Initial target here, the 200-day line, 0.76, hopefully over the next couple of weeks. Best case by the end of next month will be 1.1 pence, but obviously there may be a little bit of fundamental activity required there. On to metals exploration, which has been a slow and steady riser over the recent past, probably one of the better ones in terms of, you can just stay in there, buy and hold. Here we've got at the top of a rising trend channel from back in April 22 at 3.5 pence. Above that, we're looking for as high as 4.25 pence by the end of next month. The time frame a bit sticky there, given that this is a sort of slow burn situation, but at least we're on the right side of the 50-day line at 2.8 pence, looking for 4 pence plus over the near term. Stock of the moment is Premier African, and here the shares followed up on that rebound or ricochet off that rising 50-day moving average. We obviously already broke that line of resistance there from June around the 0.25 pence level, and the longer we stay above that, the greater the chance of a move to 0.4, obviously retesting the resistance of last month and also approaching the 200-day moving average at 0.43. Best case is some kind of explosion towards the top of the range, post-July range, of 0.6 pence by the end of next month, but that may be asking for too much. The upside is valid while we remain above that rising 50-day line. around 0.24. Stock which had some fireworks this week as well was Powerhouse Energy, and here a decent close to the week. We had a gap through the 50-day line, and we held on a positive close for Friday versus Thursday. The view at the moment is that the longer we stay above 0.39 and also the top of that gap, the greater the chance of moving to 0.55. Ideally, the target here is up to the top of that August gap there at 0.75 by the end of next month. But let's see if we can get that on that kind of time frame. Finishing off with Savannah, which I haven't looked at for ages, and here you can see that the shares have been trying to build a base after a rather horrific bear run from June last year. Just the first sign that we are in a broadening triangle base from November, and obviously a good close for the week with the shares opening at the low, closing at the high. If you are a sort of cynic as far as the shares are concerned, probably looking for an end-of-day close through the 50-day line to then take us up to the top of the triangle, an old October resistance at 2 3/4 pence by the end of next month. But ideally, we stay above the initial February support there at 1 3/4 pence. That's it for me today. More updates tomorrow.